Hey everybody, today is Friday, the 10th of June, 2022, and that leg of the bounce in the downtrend is clearly over now. This week was kind of a bloodbath. The S&P lost 5%, NASDAQ 5.5%, semiconductors 7.5%, just down across the board, except for, of course, oil there. Oil stocks, though, did take a little bit of a breather, down 84 basis points. So let's take a look at the charts here. If you follow me on Twitter, you know that I refer to this chart a lot, and it's not really centered properly because it's a lot larger than what I record the screen on. But this is a chart of the weekly time frame of the SPY, the Q, and actually that's the SPY up there, and the Russell 2000 here on the right, and then a daily, daily for the SPY, the Qs, and the Russell 2000, and 15-minute for each of those. And clearly, we are below all of the key volume weighted average price levels. Let's just take a look at the bigger picture. And this week the S&P 500, we fell short of the volume weighted average price from the March high. That's a level we've had an eye on, along with the declining 50-day moving average. We fell short of those, and this little consolidation zone, we broke to the downside and broke hard. Once we did break, it was basically on Thursday afternoon when we made the lower low below the declining 5-day moving average. Wednesday, I was a little bit reluctant to really call it bearish until we broke below there. And again, on Thursday, we clearly broke it. We made the lower low below the declining 5-day moving average. And again, I have not been bearish, for the last several weeks from the Federal Reserve over here until we broke below the declining 5-day moving average. That was the key level. There was no slowdown whatsoever at the volume weighted average price from the low. I was hoping this morning that we would see a little bit of a rally up and then decline. Instead, of course, the CPI number came in strong, and that sent the market gapped lower, and then a little bit of a late day bounce, but no one was really excited to hold it, and we've closed right at the lows. So let's back it up to the weekly time frame. Looks like we're going to test that volume weighted average price from the COVID low again, and if that fails to hold, then the next level would be the volume weighted average price off the pre-COVID high, and that would bring this market down towards about 374. I think it's realistic. I think it's likely. The question, as always, is the timing of it. We have a very clear pattern of lower highs and lower lows. We're below the declining 10, 20, 30, 40-week moving average. The market remains guilty till proven innocent. Any rally that was emerging failed on Thursday. Same is true, of course, for the NASDAQ. We spoke about the range that this market was in, and the fact that the volume weighted average price from the Federal Reserve minutes over here held so strong over and over again. But then again, Thursday afternoon is where we first saw the lower low below the declining 5-day moving average. That's when the sellers regained control after all this nonsense of the last 2 weeks. And from that move, we see, of course, that we close pretty much near the low here as well. Onto the weekly time frame, we're looking like we're headed for another test of the volume weighted average price from the December of 2018 low. That brings us down to about the 282 level. And from there, I'm reluctant to draw it, but maybe we're going to see the volume weighted average price off of the 2018 high would be the next level, and that would bring this market down to about 270. Don't think it can't be done. It's not unrealistic. So far, when we look at the COVID low, we've seen that the 50% retracement, a 61.8% retracement, would take it all the way down to 260. That seems a little bit unreasonable for now, but where we found the sellers again in here below all these key moving averages, and we were hoping that maybe the 20-day moving average would offer a little bit of support, but none whatsoever. The biggest move, or the most obvious move, came from the Russell 2000. As I mentioned several times, there were a number of factors here that made it likely that this level was resistance. We didn't know at the time it was resistance. In fact, as it first rallied up there, it was still making higher highs above the rising 5-day moving average. So I didn't want to short it there. But we came into the declining 50-day moving average. That's reason number one. We came into the volume weighted average price off of the March high. That's reason number two. We came into the volume weighted average price from the COVID low, which had been previous support, and that became resistance. And then, of course, the traditional horizontal support, reason number four, did become resistance, and we fell quickly away from there. It seems highly likely that this market is headed for a test of the volume weighted average price from the 2016 low, and that would bring it down, towards 160. Of course, not right away. That's another 10% lower. Perhaps we need to relook at this volume weighted average price. And that's basically where we are. So, then we can take that and say, what about this one? And we're basically there as well. So, there's a lot of places for this market to continue to go to. This prior support, of course, had become resistance. Let's see how it acts if we get another test of that this week. If so, then again, I think down towards that 165 level seems, highly likely in here. Now, the semiconductors, some of these semiconductor names looked like maybe they wanted to perform a little bit better. ADI, I was looking for it to become bullish if it got above 169 and a stop of 164. Of course, it broke down, so there was no trade taken there. You don't have to buy these things. You keep them on your radar. And ON, we were looking at this one as a potential purchase after a pullback. We don't ever want to buy pullbacks. I say it over and over again. Don't buy it on the pullback. Wait for strength after the pullback, and that strength never emerged. Instead, this is looking like a failed move. Same is true with NXPI. So you just don't buy these stocks simply because they show relative strength. Relative strength in a downtrend this means it's a relative piece of shit. The semiconductors overall, again, they're below the volume weighted average price from the COVID low. We can go back and put a volume weighted average price off of this peak. We're just at that level as well. Maybe from this important low, 210 could be the next level. The fact is, these are only places, these are levels of interest that become potential support and where we want to look at the market for evidence on shorter time frames that there's maybe a bounce unfolding. But the primary trend remains guilty till proven innocent. When we see a declining 50-day moving average like we do in the semiconductors, we know not to trust the rally attempt. So just keeping it simple there. Again, even if we're above the 50-day moving average for a few days, it's guilty till proven innocent. Just like Ford, right, is below its declining 50-day moving average. Just like BT below its decline when it has a declining 50-day moving average. There are tons of examples of this. Roku, declining 50-day moving average here, right up to it on a couple of occasions and then smacked back down. Spotify, same story. DOCU, big disaster today, down 20%. What was the direction of the 50-day moving average? Don't fall for these rally attempts. They're sucker moves, and you'll lose your money if you fight these trends. If they don't scare you out, they will wear you out as they continue to at least go sideways. And again, with the Federal Reserve not able to support the market, people are looking at this thing and liquidating things. There's still bigger structural problems for the market. The biotechs, this is one group that has been the leader to the downside over and over again. We've looked at this index and made an example of it as what to look for in terms of a short. That, just because it turned sideways over here didn't mean it was a low. If they don't scare you out, during that sideways, it was going to most likely go lower. Instead, we saw support broke. That support acted as resistance right at the declining volume weighted average price from the prior peak with a declining 50-day moving average. And lower highs and lower lows is what happens in downtrends. Get used to it.